This is the video lecture on filing status. In this video lecture, we're going to talk about the various filing statuses, the differences between them, and also some of the rules about who qualifies for each status. Now, anytime that you're working on a tax return, and we're eventually going to do that in our problem demonstration, if you're sitting down with a client, whether it be an individual or a business, the first thing you have to find out about that person is their filing status. And that's going to be a very important item because that's going to determine not only the amount of standard deduction that they're entitled to, but it also determines what tax rates you use because there are different tax rates that exist for each filing status. So it's very important that we know and determine what that person's status is and whether or not they actually qualify for that status and whether or not they might actually have the option of another status. That's always a possibility. So when we talk about the filing status, there are four main filing status. You have, of course, single, married filing separate, married filing joint, and head of household. There are also a couple more, but we'll talk about those two toward the end of the video. Now, the first status is single, and in order to qualify for this particular status, it's a very, very simple rule, and that is that the person must be unmarried for the entire year. So if the person was married at any point during the year, they do not qualify for this status. And as long as they were single and unmarried for the entire year, this is going to be their status. And of course, with single filing status, it has one of the lowest, in fact it has the lowest standard deduction. Then you have a status called married filing separate. In order to qualify for this status, the person must be married as of the last day of the year. And that's interesting because the person could have been single for part of the year, but as long as they were married at any point during the year, then they qualify for this status, even if they didn't get married until literally the last day of the year. If you were married on December 31st, it is as if you were married the entire year in terms of filing status. And of course, if you choose to file separately, you're going to get a standard deduction that is the same as the single person's standard deduction, which happens to be the lowest one. But nevertheless, sometimes married individuals do decide to file separately. It's up to them. But one exception to this and one important rule is if you do decide to file separately, if one spouse itemizes, both of them must itemize. And of course, that's a rule because if one of them could itemize and one could take the standard, they could, of course, that would be a disadvantage because they could lump all the itemized deductions onto the one spouse and then get a standard deduction for the other. So you can't do that. So if you file separately, either both of you take the standard deduction, or if you itemize, you both have to itemize, which means you would have to take all those items that qualify as an itemized deduction and split them up between the two spouses. And of course, we haven't talked about the items that would be qualifying as itemized deductions, but we'll do that later on in a future video. The next status would be married filing joint. And of course, for this status, you simply once again must be married as of the last day of the year. And this, of course, is another option. So married individuals do have the option of either filing separately or filing joint. And of course, since they have that option, they'll want to work it up both ways and see which one would be the most advantageous. And of course, the married filing joint standard deduction is double what it would be for a single person or for married filing separately. And then you have the head of household status. Now, this status has a couple of rules associated with it. First of all, you cannot be married, and just like the single filing status, you must be single and for the entire year. But there's a second rule, and that second rule is that you must maintain a home in which a dependent lives. So if you're a single person and you maintain a home in which a dependent lives, then you have the option of having this head of household status. Now, why is that important? It's important because the standard deduction for head of household is higher than it is for a single person. So that's why you're hoping to be able to qualify for this, because you'll get a bigger standard deduction. Now, it's still not as great as the married filing joint standard deduction, but nevertheless it is a bit higher than single. Now, in addition to the main 4 filing statuses, there are also 2 others. These are called abandoned spouse and surviving spouse. And these other filing statuses, these are only used in very particular circumstances. You have to be able to qualify in order to use these. So the abandoned spouse, how does this status work? Well, first of all, this is for a married person, but you must live separate from your spouse for at least 6 months of the year. You also must maintain a home in which a dependent child lives. And if you qualify under both of those rules, then you could actually use the head of household standard deduction. Now, why is that important? It's important because if you are married, then obviously you can't file as single. So normally you would either have the choice of filing separately or filing joint. Well, in order to file joint, that's where you get the biggest standard deduction, but both spouses have to sign the tax return. So if you have separated from your spouse, or if you're not getting along, then that would limit you only to the filing separate. If you file separate, you're going to get that low standard deduction similar to single. But if you claim that you have been abandoned, and you can show that you did in fact live separately from your spouse for at least 6 months, and you have maintained the home in which the child lives, then you could actually claim head of household, which is a higher standard deduction, even though you're not a single person. So that's just one option that could only be used in that very limited circumstance. And then you also have one called surviving spouse. Now, in order to qualify for this, this is intended for someone whose spouse has passed away. And if your spouse has passed away, then obviously that means you are unmarried, and normally you would be limited to either the single standard deduction or head of household. But with this, you could possibly continue for up to 2 years after the death of a spouse and still get that married filing joint deduction. In order to qualify, though, you cannot have remarried during the year, and you must maintain a home in which a dependent child lives. So in the end, you have the 4 main statuses, and then of course in these limited circumstances you might occasionally have someone that might qualify for one of these other 2. But in the end, it's a very important decision, and it's a very important determination that needs to be made at the beginning. What status does this person qualify for? Because depending upon what that is, it's going to then inform all of the decisions that we make about the standard deduction that we use, as well as the calculations that we use on our tax rates.